we've had a lot of phenomenal IPOs this year, stocks that have exploded higher, stocks like Hinge Health, which is a digital physical therapy platform. You get it via your phone rather than in person. Not long ago, after this one came public in May, I told you it was worth buying. At the time, the stock was trading at 44. Now it's at 55 and change. In large part because Hinge reported a stellar first quarter right out of the gate a little over a month ago. Can it keep running? Let's take a closer look with Daniel Perez. He's the co-founder and CEO of Hinge Health to find out. Mr. Perez, welcome to Mad Money.
Thank you for having me, Jim.
All right, so Dan, we were just quite fond, as you know, of your IPO. We also like IPOs that people can get in rather than these rocket ships. But I want you to tell people in your own words what Hinge Health is doing that makes it so you've got a moat, you're separate from everybody else, and you scale.
Well, thank you. Look, ultimately, our vision at Hinge is to use technology to automate and scale the delivery of healthcare. And if you think about healthcare overall, technology goes into most other aspects of our economy, and it makes things better and a little bit cheaper. The features you have in a car today would have been considered luxury 20 years ago, and a percentage of income, it's probably the same, if not lower. It's upside down, that equation in healthcare. A bunch of technology comes into healthcare, and yet prices don't go up. The member experience, the patient experience doesn't get better. So at Hinge, we're using technology to automate care itself, because that's been a challenge with healthcare. And the key moats that we have in the business is our technology moat and our channel partners. We've really focused on building things that are 3 to 4 years ahead of what we think anybody else in our sector is working on, and that's meant 50-plus health insurance companies, pharmacy benefit managers have chosen us as their preferred digital PT solution, and that gives us preferential access to customers. That means a customer could buy us without having to worry about IT security, procurement, contracting. We're not just the best product on the market or the most validated. We're easy to buy for enterprise customers.
It also seems to me a great way to analyze you is retention.
Yeah.
And the retention you have tells me you're going to do well.
Our logo retention in 2024 was 98%. When customers buy Hinge, they typically stay with Hinge, and we're really grateful for that. And it's because we deliver really good enterprise ROI, 2.4x ROI last year.
Okay, so how are you reinventing PT?
So, we're started with PT. Ultimately, our aim is to use technology.
Absolutely, and I want that, but
keep automating care. And we started with PT. PT is interesting. It's only 1.2, 1.3% of total healthcare is PT spend, but it's still a $60 billion market. And so we're using technology to scale and automate 3 key components of rehab. One is your exercises. When you got knee arthritis, hip arthritis, chronic low back pain, you got to take you through stretching and strengthening activities.
Right.
We use computer vision. That is, using the front-facing camera on your phone to track 100 unique landmarks on your body, so we could guide you through your exercise therapy right from the comfort of your own home. But Jim, you might be in too much pain to do exercises, so we've also developed a pain management device called Enzo that you could use. It delivers electrical nerve stimulation, and it gives people a technology alternative to pain medication. And lastly, we have a generative AI tool that allows us to scale and automate and increase the throughput of our care team. So as we automate the reading and the summary of a patient chart on what's the next best action, so we could increase the throughput of our physical therapists.
I want to go back to something you just said. For this musculoskeletal conditions, we are gripped by a terrible oxycodone, fentanyl, whatever you want to call it. Often it just starts when you come out of the hospital, because they give you 8 pills. I mean, I said, listen, I'll drink the bag of peas because I'm so scared, right?
Yeah.
But so we get 8 pills, so we get 15 pills. What you said was this is an alternative to that.
Yeah, so we've developed our Enzo device. We have now about 15 patents on our electrical nerve stimulation device. It's one of the most delightful aspects of our program. We give people a non-surgical, opiate alternative, non-addictive alternative to pain management. We actually have it with me right here. It's about the size of a $50. We use a gel pad. You can put it anywhere on your body, and it delivers electrical nerve stimulation to help you relieve your pain. We've published a paper actually with Memorial Sloan Kettering showing over 50% reduction in pain with using just Enzo in isolation. And that's a great alternative to opiates. And you're right. Sometimes people have a knee replacement or a knee surgery. They go home with 90 pills or 30 pills. And if the person who had surgery only uses 3 or 4, it stays in their medicine cabinet for their spouse or their teenage son to maybe come and
I just hope they use you and they throw them away. Now, tell me about something called Hinge Select.
So look, Hinge Select is our in-person care network. We are using technology to automate care, but the fact is most care still cannot yet be automated, Jim.
Right.
You still have to go for in-person care. You might need an injection. You might need an MRI.
Right.
You might need a surgery. Surgeries are, could be magical for certain people in terms of their outcomes, or you actually might need to see an in-person PT. So we're creating an in-person care network such that no matter what might be ailing you, no matter what you need as far as this care episode, you could stay within our ecosystem. We're selecting providers who are the top quality providers. We're negotiating rates that are up to 50% below private insurance rates, so we could waive costs cost share for people if they want to go to in-person PT, and they can still merge it with their digital care program as well. Waive cost share if they need an MRI, and we've got thousands of clinics already in our network, and we're aiming to have thousands more before the end of the year.
And one last thing, David. Unlike a lot of the IPOs we've seen coming, you actually you made some money.
We were trying to build a sustainable business. In Q2, we had a 23% non-GAAP free cash flow margin. And I tell a lot of startups, we're based in Silicon Valley, and free cash flow is a little bit rare in Silicon Valley.
Yes,
and so
I
try to tell entrepreneurs, ultimately, that is what matters, is are you bringing in a little bit more money than what you're spending? And that allows you to put it back into the product, put it back into your customer experience, put it back into your team.
And just keep growing, which is what our viewers want very much. I want to thank Daniel Perez. He's the co-founder and CEO of Hinge Health. It's a new company. We liked it immediately. Before we ever met Daniel, we did a piece because we think it's so good. I think maybe we undersold it. That's how good it sounds to me. Mad Money's back after the break. Thank you.
Coming up, Kramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next.